Hi, I'm Steve Marsden from Southertons, and thanks for pushing play. On the 20th of December 2017, the United States Congress passed US tax reforms, including a reduction in the federal corporate tax rate from 35% to 21%. Now that's a whopping 40% reduction. And just for a moment, let's not listen to the naysayers, the big spending politicians who only want to live in a world of high taxes. Let's look at what it means to Australia. There is a global trend to lower corporate tax rates, and in theory, a corporate tax rate cut stimulates investment by making investment opportunities sufficiently profitable to attract financing, and therefore allows them to employ more people. Now, the extent to which this is going to be the case in practice will obviously depend on how the tax cut in America is funded and whether investors consider the tax rate to be permanent or not. Now, if the corporate tax rate cut results in an overall reduction in tax on US investments, investors will believe that the tax cut is permanent. We're likely to see an increase in the level of US investment. And when you consider that United Kingdom corporate tax rates are down to 19% for small companies, France is reducing its corporate tax rates, Germany sits at 15%, Australia is a fair way behind the eight ball. The magnitude of the resulting capital loss in those countries with higher tax rates like Australia will depend on the size of the US corporate tax cut. But I can tell you, this tax cut is big. Now, for Australia, the size of the negative impact will also depend on how other countries respond. So as capital markets have been becoming increasingly global, business location is increasingly mobile, and governments have sought to drive economic growth into their jurisdictions by lowering corporate tax rates. The US reforms have the potential to accelerate tax competition between jurisdictions, making Australia's current corporate tax rate increasingly uncompetitive internationally. Here we are, we have just managed to get to 27.5%, with some companies still at 30% in Australia. Just ask yourself, if you were running a major corporate, would you want to pay 21%, or would you prefer to pay 27.5% to 30% in some cases in Australia? Messrs. Turnbull and Shorten, do you not see the likely impact? Capital will leave Australia as a result of the US's huge decision to free up domestic capital. Increased investment means increased workforces and more people employed. So both shades of politics should be happy. Let's make 2018 the year of economic sensibility. And in the meantime, call us on 4972 1300 for all your business needs. I'll talk to you soon. Thanks for listening.